the point that I want to make is gold generally is always losing 2% of its value because gold miners create 2% more supply of gold every year. But in certain occasions, it loses a lot more because there's a surge of gold. The thing you want to think about with currency is the rule of 72. It's like if you have 2% inflation, that means that you have a half-life of 36 years. You divide 2 into 72. You're like, your money is losing half of its value every 36 years in gold. My point of the tweet is that if digital credit explodes, digital credit will buy $50 billion of Bitcoin a day. And there's only $50 billion of Bitcoin a year.
Okay.
And there's only $10 billion of Bitcoin a year available for sale. And if bank credit forms, if the banks start giving you loans against Bitcoin, that's another $50 or $100 billion. So the formation of the credit networks are going to be orders of magnitude more important to the price of Bitcoin than the constriction of the supply coming from the miners.
For years, Bitcoin investors have focused on one major event above all else, the Bitcoin halving. Every 4 years, the number of new Bitcoins created by miners is cut in half, reducing the supply entering the market. Historically, these halvings have been powerful catalysts for massive bull markets. But according to Michael Saylor, executive chairman of MicroStrategy and one of Bitcoin's most influential advocates, the market is entering a completely new era. While the halving still matters, Saylor argues that Bitcoin's future price appreciation will be driven far more by demand than by supply. In his view, Bitcoin is evolving from a niche digital asset into the foundation of a global digital capital network. The real story isn't about miners producing fewer coins, it's about institutions, banks, ETFs, corporations, and credit markets competing to acquire a scarce asset with a permanently fixed supply. In this video, we'll break down Saylor's thesis on Bitcoin, inflation, money, digital property rights, and why he believes Bitcoin represents one of the most important technological innovations in human history.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Every 4 years, the amount of Bitcoin produced by miners gets cut in half. And right now, they produce 450 Bitcoin a day. In 2 more years, it'll be reduced to 225 Bitcoin a day. If you take the price of Bitcoin and do the math real quickly, it's like $32, $33 million of Bitcoin a day available for sale by all the miners in the world. That means in 2 years, there'll be $15 million of supply taken out of the system. The Bitcoin spot market trades 20 billion a day. 20 billion.
Wow.
We're going to take 20 million out of the market, right? It trades 20 billion a day right now. The derivatives market's 50 billion a day. Our company has, created $10 billion of digital credit in a year. There's only $10 billion of Bitcoin available for sale by every miner in the world. So if the digital credit business grows by a factor of 2 or 3 or 4, right now we're buying 2 Bitcoin for like every Bitcoin mined.
Wow.
Just our company. So my point of the tweet is that if digital credit explodes, digital credit will buy $50 billion of Bitcoin a day. And there's only $50 billion of Bitcoin a year.
Okay.
And there's only $10 billion of Bitcoin a year available for sale. And if bank credit forms, if the banks start giving you loans against Bitcoin, that's another $50 or $100 billion. So the formation of the credit networks are going to be orders of magnitude more important to the price of Bitcoin than the constriction of the supply coming from the miners. That wasn't always the case. In the first 4 years of Bitcoin, half of the Bitcoin was mined. And the next 4 years, 25% of all the Bitcoin in the world was mined. So it used to be, it was a supply side dynamic driving the price.
Right.
Now, it's really a demand side. And the thing to look for is the amount of capital that flows into the ETFs, the amount of capital or credit that's created by the banks, and the amount of digital credit that's created by companies like MSTR. Every currency generally has been issued by a government, and they're all like credit-based currencies. So, the Babylonian currency, the Lydian currency, the Greek currencies, the Roman currencies, the European currencies, the Russian currencies. And if you read the history of civilization by Will Durant, it's like 14,000 pages.
Wow.
He's got 150 to 300 stories of currencies failing. And he's got one funny line, in the book. He's talking about like 16th century Russia under the Tsar. And he's talking about how the Tsar overprinted the currency to fight a war and it went to zero. And he said, the last thing, you want to save your wealth with is with money.
Yeah.
Well, the last thing you want to save is money. It's like, and that's really just, government currency. The best currency traditionally was gold, which was the hardest currency, the soundest money. And gold has traditionally like a 2% inflation rate a year. So it's losing 2% of its value a year.
Wow.
Because the gold supply is not fixed.
Oh, I thought it was. It's not a finite amount.
If you couldn't mine gold, for example, we had hyperinflation of gold when Caesar came back from the Gallic Wars. He stole so much gold that he dumped gold on the market, and they had hyperinflation in Rome when he came back. And we had hyperinflation in gold after the California gold rush. The 49ers, that created inflation, and that created hyperinflation in the European currencies that are gold-backed. And it was good for the Americans. We pretty much bought a bunch of stuff from the Europeans because we debased their currency by creating too much gold. And when the Spaniards invaded South America and Central America, right, after 1492, they stole so much gold, right, from the Incas, the Aztecs, the Mayans. So they brought that gold back, and Europe was on a gold standard. They created hyperinflation, right? And so prices in Europe over that century increased by like 500% or something. And it actually was a source of problem for the Spanish Empire because they basically were just living off all of the stolen gold, and they destroyed all their own industries, and they couldn't make anything. And the point that I want to make is gold generally is always losing 2% of its value because gold miners create 2% more supply of gold every year. But in certain occasions, it loses a lot more because there's a surge of gold. The thing you want to think about with currency is the rule of 72. It's like if you have 2% inflation, that means that you have a half-life of 36 years. You divide 2 into 72. You're like, your money is losing half of its value every 36 years in gold. If you have 7% inflation, you're losing half your wealth in dollars at 7% inflation every 10 years.
Oh my gosh.
You see?
That's crazy.
And you're like, oh, okay, so that means that if you had $1 million 100 years ago, you get cut in half 10 times. Okay, what does that mean? I'll tell you what that means. The land that my house is on in Miami Beach is waterfront property that cost $10,000 in 1930. It cost $10 million. It's 1,000x inflation. So the thing you want to be keeping in mind is, fiat currencies. So the best one is going to lose 7% of its value a year forever.
The best one.
That's the U.S. dollar has lost 7% of its value against scarce desirable assets. Against a fair yardstick.
Right.
It's not going to lose 7% of its value against manufactured cereal because we create box cereal much more efficiently today than we did 100 years ago. If a robot can make it, it's not going to lose its value against listening to Beethoven's Ninth Symphony because everybody can listen to Beethoven's Ninth Symphony for free.
Yeah.
Used to be rich people could listen to it, you see. So it will lose its value against beachfront property, or against Picasso, or against something that's truly rare. So that's the best. The mid-tier currencies will lose 14% of their value. And the weak currencies will lose 20% of their value a year, and they will just hyperinflate and collapse, like in Argentina, where at that rate, your currency is going to collapse in 10 to 20 years.
Wow.
And you see it.
Bolivia's going through it right now.
Yeah. What Bitcoin is special, though, is because it's digital gold, but how do you make gold better? If I made it illegal to mine any more gold and I capped the gold supply at 21 million gold coins, and then if I made gold weightless, and then I gave everybody in the world the power to teleport their gold here and there, and then I let you store the gold in cyberspace forever for free, gold will be a better currency. It would be a better store of value or a better capital asset than it is right now. And that's Bitcoin. I just described it, right? It's just the perfection of the idea of hard money, by an engineer. using technologies that we didn't have 50 years ago. In the history of the world, we never had the technology to create perfect digital money or perfect money.
Yeah.
And so every economist that ever wrote on the topic, their idea of perfection was gold coins, maybe, or gold bullion, right? And you can't blame them for not imagining Bitcoin is kind of like a guy in 1800 or 1600 not imagining electricity. What if I gave you odorless, colorless, invisible, infinitely powerful energy? You know, what they call that magic 100 years ago.
Right. Wi-Fi.
That's magic,
Yeah.
stuff that we have today. So most economic theory, most political theory, it's based upon a world where people didn't have Bitcoin. They didn't have digital capital. So I would say Bitcoin kind of marks this period where economics goes from being an art to a science.
Yeah.
You know, we go from superstition to engineering. It's like, well, I just think we should do that. Well, because there's no better. And now there's actually a right way. With electricity, there's a right way, you know? With steel, there's a right way to do things. And with Bitcoin, there's a right way and there's a wrong way. Most of the world still doesn't get it. You can't blame them. It's like 10,000 years of not knowing it, and all of a sudden it pops up 15, in 2009, not many years ago. And the next 4 or 5 years, we'll introduce digital assets and digital capital and the benefits of digital credit and digital money to the world.
That's exciting.
And that's good.
For centuries, gold has been considered the world's premier store of value. Gold possesses many desirable characteristics. It is durable, scarce, and widely recognized. However, Saylor argues that gold still has a fundamental flaw. Supply is not fixed. Every year, miners produce more gold. Historically, this expansion increases the total gold supply by roughly 2% annually. That may sound small, but over long periods, it significantly impacts purchasing power. History also shows that gold supply can increase unexpectedly. The California gold rush dramatically expanded global gold production. The Spanish conquest of the Americas flooded Europe with precious metals. Ancient military campaigns often returned with massive quantities of gold that altered economic conditions. These supply shocks created inflation even under gold-based monetary systems. Gold may be superior to fiat currencies in many respects, but it is not perfectly scarce. Bitcoin is different. Its supply is permanently capped at 21 million coins. No government can change that. No miner can discover a new Bitcoin mine. No technological breakthrough can suddenly double its supply. For the first time in history, humanity has access to a monetary asset with absolute scarcity.
You know, the beauty of Bitcoin is like Cyber Manhattan. And what would you like about that? 21 million blocks in Cyber Manhattan, no mayor. No mayor, no governor, no zoning board. No one can zone, your property, rural agricultural. No one can put a property tax on it. No one can rent control it. And when you decide to take your property with you, you can teleport it anywhere else in the world. With real estate, if you're investing in a city or a state, you're trusting the mayor, the governor, the neighborhood, the weather.
Right.
What if the climate changes? What if they don't have, Jazz Fest here next year? What if they reroute the road? There's just a lot of uncertainty that creates stress, in the physical world and the political world. If you just had a digital building in cyberspace and there was no bad weather and you didn't have to worry about traffic and rent control and mayors and you could take it with you. And that's the greatest joke in money, right, is that people say you can't take it with you. Well, Bitcoin's the first thing you can take with you. You can take it with you to the grave. You can take it with you any other place. You can zap it off into the hemisphere, right? It can live on beyond you. And you can't say that about any other physical asset. You can't say it about a company. You can't say it about a building. You can't. The pharaohs tried to take their gold with them. They couldn't. They're grave diggers that'll break into your pyramid, right? So the ideological Bitcoiners, the people at this conference, they would say Bitcoin represents the apex property rights of the human race. It's for the first time in the history of humanity, you have property rights that are yours that no one can take away from you. If you memorize those seed phrases and your money is in your head, I can kill you, but I cannot take the money. With everything else, you're a rich man, I kill you, I take your stuff.
Right.
Okay? The incentive is the violence. I can take your gold, I can take your building, I can take your company, I can take your securities, I can take your bank account, I can take your Picassos. But with Bitcoin, if you know what you're doing, right, I'm not getting it.
Yeah.
And that's incredibly empowering, because since I can't get it through violence, I have an incentive to negotiate with you. There's an incentive for me to get along with you, right? Because you have power, you have economic power. And so it is the great digital economic empowerment of 8 billion people. And that is the base layer. And if you want to create an empowered, rational, fair digital economy, you got to start with this base layer that represents integrity and empowerment and trust. And that's why I refer to it as digital capital. I think the dollar has emerged as the world reserve currency. It's becoming the world reserve digital currency. If you go to Europe, the Europeans don't want the euro. They want the dollar. If you talk to the people that create stable coins, you say, what's the demand for the digital euro versus the digital dollar in Germany, in Europe, in France? They'll say that the demand is 100-1 in favor of the dollar over the euro. So here's what I think is going on macroeconomically. The US dollar is the world reserve currency. Everything's pegged to that. And yeah, it's maybe debasing. It's inflating like 7% a year, generally. Plus some years, like during COVID, it inflated more faster. And other years, it'll inflate slower. But it will gradually just expand at about that 7% a year. And that kind of works out to, if you kept all of your wealth for 30 years in the dollar, you would notice you got poor. But most people don't have a 30-year attention span and they won't notice. And so, everything kind of just works along. People are going to sell their CNY, their Chinese currency, their Russian currency, their Ukrainian currency, their European currency, all the African currencies, all the South American currencies, when they have an opportunity for the dollar. So the dollar will probably hold that strong position for quite a while, because the other currencies are just much worse. Like, where are you going to go? Where are you going to run to? It's not that the U.S. is perfect. It's just that everybody else is much more imperfect. And so I have confidence in the nation to manage that. And if you're an optimist, you would say, we're going to harness digital intelligence and digital assets and technology and science, and we're going to create a robot in every home that costs you $100 that does all your work. Every car is going to drive itself. We're going to create unlimited energy by doing modular nuclear reactors, and we're going to make them 100x more efficiently than we've made them. And we're going to reduce the cost of legal research by a factor of 1 million. Now everybody can have 10,000 lawyers working for them for $10 a month.
Yep.
Right. So there's a lot of ways to generate prosperity and abundance. I think that technology will allow us to create a lot of things in abundance. And I think we will grow the economy at a rate fast enough to negate the worst impacts of monetary expansion. And that's another way of saying, I don't have confidence we'll get to 0% inflation or debasement. I have confidence that the negative will be currency, money printing, but the positive will be inventions by NVIDIA and Tesla and,
makes sense,
all of the entrepreneurs. And at the end of the day, you grow yourself into the future, right? If you look at the impact of, say, Standard Oil on the world, the human condition was so much improved when we had gasoline and diesel and kerosene. Like, used to be people spent an hour a day carrying water back and forth from the well.
Wow.
Yeah. So imagine yourself, carrying water up 5 flights of stairs or walking 50 miles on foot to get from here to there, right? And then we replaced that with like cars from Henry Ford.
Yeah.
And gasoline, and imagine rowing across the Atlantic, or you get in a boat, you put out sails, and now we fly via jet, So there are certain obvious technology developments that industrialize the world, and right now we're getting unlimited human intelligence, and there'll be a wave of white-collar automation, and then there'll be a wave of blue-collar automation. And it will be disruptive, and it will be scary and anxiety-inducing. But no one's starving to death. There's just going to be a political debate and a social dialogue about how to distribute all that wealth.
Universal basic income.
Universal education, universal healthcare, universal basic income, universal, heck, you've already got universal entertainment, right? You have like infinite free everything
YouTube
on
University.
right? And like it used to be people paid money for that.
Yeah.
When I was a kid, rich guys tried to impress women by showing off their record collection, but only rich guys, because the rest of us couldn't afford a record collection. So the world's going to change, but I think it'll change for the better, and I'm an optimist.
Saylor often describes Bitcoin as an improved version of gold. Imagine if gold had a fixed supply. Imagine if it weighed nothing. Imagine if you could send it anywhere in the world instantly. Imagine if it could be stored securely in cyberspace. Imagine if ownership could be verified globally without requiring a trusted intermediary. That's essentially Bitcoin. It combines the scarcity of precious metals with the efficiency of modern technology. According to Saylor, Bitcoin is the engineering solution to thousands of years of monetary challenges. What previous generations viewed as impossible is now achievable because of advances in cryptography, distributed computing, and digital networks. Bitcoin transforms the concept of hard money from a physical asset into a digital one.